What do you make of Brian Moynihan's comments? We've heard a lot of talk and a lot of thoughts about recession, and on top of that, an earnings recession as well.
Yeah, I think the comments are valid. If you're looking at some of the estimates the analysts are projecting when it comes to earnings in Q1 of this year, they're a lot lower, and they could be, what the lowest we've seen over the last couple of years. And a lot of that is because of the environment that we're in right now, the macro level environment, and a lot of the cracks we're seeing within the consumer have not fully gone through yet, but there are a lot of cracks within consumer, and those are playing a part in demand, and demand being weakened across several industries. So those comments make sense. And a lot of that could be priced in, but not everything priced in yet. And so you're seeing a lot of that being played through in the market. And I think that's what we're seeing right now.
You know, Max, we often see banks as possible gauges of what's going on in the broader economy. Bank of America, a huge retail bank. Brian Moynihan's comments coming on the back of Jamie Dimon saying some very similar comments. How do you see that impacting the markets today?
I think that what the banks are showing you, at least in the top five, that they're very strong and that they're seeing the consumer is still very strong. They're just spending differently. And you're seeing their balance sheets, while they've been challenged with the unrealized losses at the banks, for the most part, the top five, top 10 are doing very well. And while the market is trying to predict a slowdown, a recession, right now the consumer is definitely not acting like there's a recession coming.
All right, so Delano, I'm going to come back to you right now. We have some breaking news this morning. UK inflation coming in hotter than expected. Double digits. A lot of people did not expect that. The odds of a 25 basis point hike here in the U.S. now moving to 88%, according to the CME FedWatch tool. Do you see rate hike concerns impacting certain sectors here in the U.S.? And if so, which ones?
Yeah, I think that, one, obviously they're going to affect some of those growth names that, have actually done pretty well throughout this year. But if we continue to see rate hikes being past May, the expectation right now is, after May, there potentially be a pause. But I do think we'll see 25 basis point move in May. But past that, the market is not expecting that. That could be a situation where we may have to re-rate a lot of these growth names. And that, I think, after May, if someone has a lot of exposure, too much exposure to a lot of the growth names, they want to possibly recalibrate. I think so far the trade has been working well. But, with more data that we get, and obviously inflation on the top line has been still fairly hot, but it's been trending downwards. With more data that we get, we're going to have to potentially re-rate. And I think that's the big thing investors have to look for.
All right, Delano, thank you very much for that. Max, same question. Any sector you see being particularly impacted by this rate pressure? We're seeing the oil market actually back below 80 on that rate pressure.
Well, I think the optimism in the NASDAQ has gotten a little crazy, in our opinion. Roughly up 19%. You're seeing companies like Apple up 25%, NVIDIA up 90%, Microsoft up 20%, and all three of them are not saying top-line revenue growth is only that strong. So you're seeing a NASDAQ that's anticipating not only the Fed to stop, but actually reverse towards the second half of the year. And so if you look at any changes in that policy, the NASDAQ would be too aggressive right here. 30 times earnings, and with the 19% growth rate that they're placing on these companies, I think the NASDAQ is probably most vulnerable to a continual increase in rates.